Welcome, ladies and gentlemen, everywhere on the world, wherever you are. My name is Jochen Staiger. I'm your host today for Minds and Money Pitch Battle. And I'm very happy we have a lot of good judges, a lot of good companies who want to present here. As you have attended the last Minds and Money sessions and fair and exhibition in London, you know already how it works. But for those who don't know how it works, I will explain it shortly. We have a format like Dragon's Den or Höhle des Löwen, which is the German version of that. And this is all sponsored by Dundee Goodman. I also want to say that in addition. And who will invest $1 million in one of our battlers? We will do that like 3 minutes presentation of each company, and then we have 8 minutes Q&A where our judges will hopefully roast our CEOs here. That's what we want to see. And then finally at the end we will make up our mind with the judges, also with telling us the reasons why they would invest in a company, and we hopefully will have then a winner. So let me first introduce our battlers, please. We have Steve Swatton, the CEO of K2 Gold Corporation. Then we have Trent, Mell, the president and CEO of First Cobalt. Then we have Kelly Malcolm, the vice president exploration of Amex Exploration. And last but not least, Michael Rowley, the president and CEO and director of Group 10 Metals. Ladies and gentlemen, then let's get started. We will start with Stephen Swatton, the CEO of K2 Gold Corporation. So please share our screen with us. And Steve, I would say the floor is yours. 3 minutes.
Can you see me, Jochen?
Yes, sir.
Okay, well, I'm here in California on site at our project, the Mojave property. And as you can see, this is what the terrain looks like. What we're drilling is an epithermal gold situation that has been discovered in the past by BHP and Newmont, but they put 35 holes into it. But the company came in across this property about a year ago as a result of Chris Taylor, who I'm pretty sure you will know now as a result of Great Bear and now maybe Kodiak as a result of today. He's the chairman of that one too. He first identified this property in 2013 as something of interest. We spent about 9 months negotiating the deal, and we're about to start drilling. And 2 weeks from now, 3 weeks from now, we're going to put 16 holes into the ground, and hopefully we're going to be advancing this property to the next stage. And the reason why we're so excited about it is it's 1.5 kilometers long. It's at surface, oxide gold, and there's a bunch of cyclists that are going past here. And we're going to be drilling from a heliborne platform simply because we inherited a drill permit from Silver Standard. Silver Standard got the drill permits, and we're the first people to have drilled it since 1994. The last people were BHP Billiton, and in one of the holes they had 100 meters of up north of a gram. What we've done is we've done more geochemistry. We've extended the geochemistry to the north for about another kilometer. And we have additional targets. And we've submitted a second drill program here in California for a 30-site program. So at the moment, we're doing a 4-site program with 16 holes. And then we're going to do a 30-site program. And so far, so good. All I can say is that California has got a reputation for being a difficult place to permit. But so far, we've had a lot of cooperation from the BLM, and we've not been hindered at all. And unfortunately, this COVID situation seems to have worked somewhat in our favor. The majority of the population around here rely on tourism. And the county supervisor told us that he has 17% of the road traffic that he normally did. And the whole community revolves around pumping gas and restaurants. It's a stop on the way to Mammoth, which is one of the ski resorts up here. It's a blue-collar situation here. And so far, I've got total support from the community. And I think that we have a good chance of getting this away this time. Okay, Jochen, I think I'm done.
Super. Hey, that was perfect. This time you stopped. I love it. 2:59. Thank you very much, Steve. So please, our judges, switch on your microphones and your video. And let me also introduce our judges. And we have Lawrence Lepard, the managing partner of Equity Management Associates. And then we have Miranda Werstiuk, the corporate development director of OCIM Precious Metals. And in addition, we got Jayant, Bhandari, senior analyst, mining and minerals and institutional investor consultant from Anarcho Capital, Lawrence Roulston, managing director of WestBay Capital, and Angelina Mehta, director of mining investment banking, Laurentian Bank Securities. So, ladies and gentlemen, please, now 8 minutes for you.
Let me start with a question. How much cash do you have on your balance sheet?
We have 3.4 million.
Okay.
And we have no overhang. We have no warrants outstanding. We just exercised our warrants recently. We had a forced exercise of them, and we brought in, I think it was 95% of them.
And what's your market capitalization today?
About 25 million.
Okay. Any notable investors that we would know?
You might know Peter Brown. He's one of the larger ones. But we don't have any of the usual Sprott type situation. No, it's tightly held within mainly Vancouver well-known brokers.
How long ago did you get started
in this project? A year.
Yeah.
1 year ago.
In this project.
Yeah, I came down here a year ago. We started taking some samples 3 months into it, even though we hadn't completed the deal. And yeah, we're at the stage now where we completely outlined the area we want to drill. But interestingly enough, it's an epithermal gold print, but it looks like it's on its side. It's a porphyry copper on its side. We may well have a porphyry sitting to the west side, but that was something that BHP had in one of their reports. So we're going to follow up on that. Probably the next phase. We don't want to scare people around here too much.
You're drilling, are you doing RC or diamond?
RC.
Steve, how far would that 3.4 million get you?
We'll be well into next year. I mean, okay. The program itself is just under 1 million US.
Okay, Steve, why was nothing done on the project between 1994 and now?
Yeah, it was in litigation with the landowner. There was a little bit of shenanigans going on when BHP pulled out. They pulled out simply because, and I was with them shortly afterwards, because they got out of gold altogether. But what they did is they vended out certain of the properties to the senior management, which then went into 7-year litigation. And then subsequent to that, we had a couple of Saite juniors who basically were trying to flip it. And then you had the 2008 financial crisis, and it sort of bumbled along with a minimal amount of work. The last people that did any really serious work were SSR. And the CEO of SSR, Paul, I know pretty well, and they pulled out simply because they didn't want to distract from their Nevadan properties, and they wanted to concentrate on that. And yes, it's California. I mean, there would be a little bit of attention drawn to this, and they didn't want that at the time. But they're the ones who actually put their hand up highest to come back in if we manage to sanitize the project.
Can you highlight a couple of key points to do with the geology of the project? That was any of the things done between 1994, recently in the 1 year and before 1994? Yeah,
the most. So what we did is we did Worldview 3, but that was following up on some airborne imagery that would be done before. But it certainly looks like the cross section between. The cross between northwest trending faults and northeast trending faults, and absolutely what we call the Newmont zone, which is the main zone, was where we got the highest grade mineralization between 2 and 3 grams, and then another one, Dragonfly, which was discovered by BHP 1 kilometer north, exactly the same. So we now have a very good handle on it. But what's interesting is there's some copper values about 8 kilometers to the west in an old mining district called Keela, and that's going to be our focus for the future. So the people in the past actually brought it along, but our worldview and our total geochemistry, which we did about 6 months ago and got the results back, sort of duplicates what they had before with their base metals to the west and the gold to the east. But what we've managed to do is, because we know about the structures, we've managed to extend the mineralization on strike for about 1 to 1.5 kilometers. So it's now about 3 kilometers of strike.
Thank you.
Steve, my internet went out for a minute, so I apologize if you said this well. I was out of touch, but the permitting situation, I know in California, there's a lot of concern. I think the concern is way overstated, but are you fully permitted now to do the current program and to do the drilling?
Yeah, it's a good question. Yes, we're fully sorry. Yes, go ahead.
And you know, looking way down the road, when it comes to mining, I'm sure you'll get the permits, but do you foresee any undue delays just because of the jurisdiction?
It's a very good question, and it's an unknown because of this COVID situation at the moment, and as we all know, it's fairly short term, but it's really exposed the fragility of these local desert type communities. And I'm meeting up with a couple of other people who've got properties here. Certainly the local county supervisor has gone on record as saying that he wants more diversity. And actually, he went on record in the Sierra Club magazine. Look, we know the usual people have their issues. This is California. It's not the slam dunk. But so far, we haven't noticed that the same problems that I had in the past we're having right now. However, it's very much political. If Donald Trump continues to get in next time, we have a much better chance. If the Democrats go, it's uncertain. It's like trying to turn a juggernaut round or a tanker. It's unlikely that the concerns that the locals have about wanting to develop this will not go unnoticed with whichever administration. And by the way, Dianne Feinstein, who we all know, she was the governor who actually segregated this area out of the Death Valley National Park because it has mineral potential. So you can't suck and blow at the same time. If they've taken it out, and our lawyers are onto this, and by the way, we got very good legal support from Sacramento and a tribal lawyer as well. We think that, yes, we're going to have issues, but I don't think, in terms of your second part of the question, is it going to be prolonged? I don't think anything more than it would be anywhere else, except for the fact that the tribal issues are becoming a little bit more vocal. And what we've done is we've installed a person who's experienced at tribal issues right at the start, and we've already had discussions. And so far, the tribal leaders are pleased that we've come to them before we've started this drilling program. So I think we've gone about it right. Am I done?
I have a question.
1 minute to go.
Perfect. So my question is also ESG related, but it's more about your company, K2 Gold. You are in California. I noticed there's no, it's a very short list of board directors and none of them have much diversity. Any comments on?
Well, I would argue with that. Kamenak had a lot of First Nations. Sorry, did I get your question right? The directors don't have a lot of adversity? Is that right?
No, I was just asking about diversity on your board, please.
Oh, diversity. Well, we've only got a few directors on the board. We're waiting to make sure we have one lady at the moment that we're considering. She just left Freeport on September the 1st, and we're considering bringing her onto the board. She's had a long background, and she was a lobbyist for Freeport in Washington. So we had a director die a couple of years ago, so we purposely left the board open so that we can have more diversity within the board.
Okay, thank you very much. I think we have to change a little bit on the next company, the Q&A, because if we go in the order, then probably always for the last, there's not enough time. So I would prefer that who has a question then can take the question also. I think that makes a little bit more sense. So great, thank you very much. That was the first round of Q&A. The next company is first Cobalt with Trent, Mell, President and CEO. So Trent, if you are ready, the floor would be yours.
All right, thank you, Jochen, and good evening or morning, depending on where you may be. So first, Cobalt, our story is about electric vehicles. Our story is about a low carbon economy. We're about having a world-class partner, and we're about having cash flow in about 18 months from now. So this year, Europe is set to surpass China as the biggest EV market, somewhat to my surprise. But if you look back in June, in the shadows of COVID, passenger vehicle sales were down 24%, and yet plug-in vehicle sales were up 95%, representing about a 9% penetration rate on total passenger sales. So you're getting really close to that 10% tipping point where you point to sort of mass adoption of a new technology. And for us, I mean, Cobalt, let's be clear, it's essential to lithium-ion batteries. That's not going to change in the near term. And you've got the dilemma of 2/3 of cobalt coming out of the DRC and most of that then going to China for refining. And so First Cobalt owns the only primary cobalt refinery in North America. It was put on care and maintenance in 2015. And we created a strategic relationship with Glencore that's going to have us producing cobalt for the electric vehicle market from our permitted facility here in Canada. So CapEx, 56 million. OpEx is competitive with China on a DFS we put out in the month of May. Asset level EBITDA, 37 million in year one. This is all in US. And after tax IRR of 53%, NPV 8 of 130 mil, and a payback of under 2 years for a facility. This is not a mine. This is a facility that can go for decades. Vale's Port Colborne facility just celebrated 100 years. So now we're negotiating currently a toll agreement with Glencore for a 5-year term, and jointly we're advancing financing discussions on a 65 million USD capex with 4 potential parties, 2 levels of government. So one of the competitive advantages we're going to have over China, operationally we're going to be competitive, but our ESG mandate looks phenomenal. We've got low carbon footprint, and we're working on a life cycle assessment that's going to point our way towards a carbon neutral operation. Now, in addition to that, we've also got 2 other cobalt mineral projects. Our flagship is in Idaho, 5 million tons, high grade underground copper cobalt mineralization on patented land, good continuity, 10, 20, 30 meters in the thicker intercepts, and confidence that we can continue to grow that. And I should say that's inferred and indicated. And then lastly, we've got assets in Ontario, in the Cobalt Camp, as we call it. Historically, 104 historic silver operations. We own half of them, and we're getting a lot of inbound interest in the midst of a pretty strong silver market. So I'd say, look, silver market, our precious metals has been hot, but unlike gold, I think you're in a good position to double the price of the commodity from its current 15.5, maybe returning back to its highs of $30. It'll give us some good tailwinds on the back of our own story. I would say that, you know, one of the things I love about my job at First Cobalt is we're in the plan, we're in the EV revolution. We're green, we're permitted, we're in Canada. We've got a great cash flow potential here 18 months out with some big catalysts around the corner. So I would be honored to earn all of your confidences as a shareholder. Thank you.
Thank you very much, Trent. Perfect. 2:59. So please leave your video on. Leave your video on, Trent. I think that's better. And I please urge our judges to come back here to the stage. Who has the first question?
I've got one.
First.
What's your market cap right now?
Market cap, so just about 50 million Canadian.
And the project you outlined, the one with the 130 million and NAV 8, where's that located geographically?
Yeah, geographically, it's about 5 hours north of Toronto, so in Ontario, Canada.
Okay.
Trent, maybe I missed it, but your business model for the Port Colborne facility, are you tolling or do you buy concentrate and treat it?
Yeah, so yeah, I was comparing the, and I'll share with you if I think I've done this right. I'll share with you the picture of the refinery. Can you see that right now?
Yes.
Okay, so there you go. This is actually in a town called Cobalt, incidentally, Cobalt, Ontario. Port Colborne is the Vale refinery, and I'm just giving that as an example. It's been around 102 years, I think.
Okay, got it.
And so we're here up here in Canada.
Trent, the $65 million capex, how are you going to finance it? Debt, equity, what's the balance?
We're looking at about 45 million in debt. And so what I want to do is pair up the 5-year toll arrangement we have with Glencore and the 5-year debt repayment scheme. We actually fit inside the green portfolios of some of the European banks. So I'm feeling pretty good about a LIBOR plus scenario that's not going to get anywhere close to the kind of PE rates of return that you might see. We do have another 20 million, and that could be a combination of Glencore, government, and maybe a small equity raise.
And the 37 million of EBITDA, is that cumulative or is that annual EBITDA?
Yeah, so that's annual. That's at the asset level, and that's an important. I gotta be really clear on that. We did the feasibility study on the asset, but we're toll treating. So that assumes you're buying the material in the market. Long-term price assumption of $25. The purchase price, the payability factor on the hydroxide tends to move in tandem. So high price, high payability factor. So we've got a 70% payability on the hydroxide, 25% $25 cobalt. Glencore and FCC and our lenders are going to be sharing that piece of the pie. So my aspiration would be to try to accrue half of that to FCC during the tolling period. And then after 5 years, we're in a position to face the market debt free.
Trent, what's the timing on all this? Sorry.
That's all right.
Yeah, no worries.
Trent?
So we're in the middle of an optimization under DFS. We got a committee, we got Glencore folks from around the world and Asenco and our own team. And we're working on bringing down our OPEX. I think we're going to see a decent reduction to further strengthen our, anything under $3 OPEX is considered competitive with China. We're at 272. I think we can get that in the low twos. So we're going to work on that. Permits go in at the end of this year. We'll have them by spring. Priority project for the government of Canada and Ontario because it ties into EVs and their supply chain. So construction commencing, June is the target. And the financing and tolling agreement, and this is the problem. You want to put a nav on us. What is the toll? And so I'd hope to have that into the market within about 60 days, maybe 90 days at the outside, tandem of the financing piece with the commercial contract.
Trent, you said you're using $25 per pound of cobalt?
Correct. Yeah.
The current cobalt price is $15. How does that affect your NPV?
At current spot, the NPV of 130 drops to, I think it was 80, 89 or something. Apologies. But if you look at, and this is coming out of Benchmark Minerals that did the long-term price forecast. They had 27. We capped it at 25. Cobalt did a bit of a round robin from 15 to 30 down to 12, and it's doing a bit of a retracement now. So that's a fair question.
Right.
Now, actually, maybe I would add in the tolling period, we're going to be somewhat insulated. We'll have price participation if all goes well, but because we're getting a fixed dollar per pound of production, the important thing is to protect the downside, make sure we can pay our debt, and then face the market at a future date.
Right. Okay. And what is the worst case scenario when you just buy ore from other people and process it at the smelter? What would be the value of the smelter, ignoring your own cobalt assets?
Yeah, if I ignore the cobalt assets, and if you were to do kind of a 5 times EBITDA multiple on the asset, I could see a $200 million valuation on the refinery alone.
Right.
If you would allow me to sort of go that way, I'd point out, we just saw the picture earlier. This is in a field. We're in a mining corridor, Timmins, Kirkland Lake, Sudbury, over to the Quebec side of the border. To me, the biggest opportunity we have is going to be to expand into the battery recycling space. It's the black mass, as they call it, is cobalt, nickel, and manganese as well. It's a true blue ocean, and because this is built and permitted, it's got to be expanded. We're years ahead of the competition, and so you might see a situation where we've got a chemicals division, a chemicals company, and a mineral company that don't belong together. But time will tell.
So can I ask a question about, we talked about your mineral properties and what value they carry within your current market cap. What's the timeline for them actually producing, or is that not a priority at this point, Trent?
Yeah, I would say the Canadian assets, cobalt, silver. I mean, silver is really leading the charge, just given where it is in the market. We might be able to monetize a little bit of that. We got a massive package, and so that becomes a sort of accretive to the main focus of the refinery. Iron Creek is a fabulous asset in its own. One of the very few places in the whole world where you could have a primary cobalt deposit is that Idaho Cobalt Belt. And Iron Creek, unlike most deposits, we don't have the arsenic problem that you see elsewhere. It's a pyrite. So we'll have to deal with that from just a concentration perspective. Timeline, I think it's safe to say it's 5 years out. We've got to do a lot more drilling. I'd like to at least double it. We'll do some geophysics this year. I did back off on exploration just in a tough market. The market wasn't going to reward us for that. But I would like to get back at it by next spring.
I have one more if we have time.
Sure.
Okay, just with your relationship with Glencore, how do you protect your own shareholders in the event that maybe something doesn't go as planned?
Yeah, that's the most common question I get, I suppose, on the downside risk. And I used to work with North American Palladium and Sheridan Barrick and all that. But when I was at the Palladium company, every 2 years I would find myself in Sudbury, jokingly on bended knee, right, trying to sell to Vale or Glencore and the predecessor. So, the shoe's not really on the other foot. I mean, now we've got the processing facility, but of course they're Glencore. The culture there has changed. They're under investigation. We know UK and US. There's been a big turnover of the culture there, young leadership and a bigger culture of compliance. Thus far, and I'm not under any illusion this is going to get easier. It's been very collaborative, very cooperative. We got our head of development is an ex-Glencore guy, but they're tough. And my job and our job as a company is just not to screw it up. where juniors fall awry, I think, is when you execute a contract you don't know what you're getting into, or you don't execute. But thus far, it's been pretty good. We give them access to the North American market. They could be the front runners in developing this market. And right now, they sell their hydroxide from the DRC outright to China, and their traders don't get to trade in the final product. So there is some synergies there that we're going to mutually achieve.
1 minute left. More questions?
So, Trent, what proportion of the world's cobalt supply can you meet, assuming the asset goes into 100% production?
Yeah, that's a great question. So the market share that we're targeting year one is about 5%. And when you look at the sulfate, this is a small market, right? It's about 130,000 tons per annum. So a fraction of the copper or nickel markets. Most of that's out of China. When you look at refining capabilities outside of China, you've got Sumitomo in Japan, Umicore in Finland, and then hopefully before too long, you'll have first cobalt. So it's not only the proportion, the 5%, you can keep growing that once you get your footing. It's the fact that we're ex-China, and in a post-COVID world, I will tell you, the automotive companies are a little bit more focused on redundancies and onshoring of their supply chain. So I'm feeling pretty good. We've got some fabulous conversations with the end users, which I can't talk about, but Western automotive companies.
Cut. Thank you very much, Trent. Well done. Thank you. Yeah, so then we move on with Kelly Malcolm, who is the Vice President Exploration of Amex. And Kelly, if you are ready, the floor would be yours.
Well said. So Amex is the high-grade exploration company. We've made a number of very high-grade discoveries in Quebec over the past 2 years. Raised in excess of $45 million. We're one of the top performing companies on the Toronto Stock Venture Exchange over the past 2 years. Over this past year in particular, share price increased from about $1 Canadian up to $3.30 currently. Eric Sprott is our biggest shareholder at 15%. Institutional holdings around 40%. Management well vested at 13% of the company. $23 million Canadian cash on hand. Closing on a $12 million financing within the next few days. That'll give us $35 million cash, plus this will bring in about $15 million, and these are deep in the money warrants. So what I'm gonna do is a little bit of a different presentation. I'm gonna take you through our project in 3 dimensions right now. So this is our overall property package in the mining-friendly jurisdiction of Quebec, 4,500 hectares, and we're focused on this yellow wedge in the center of the screen. We've denoted 4 different deposits to date: the Gratienne Gold Zone, the Grey Cat Zone, the Eastern Gold Zone, and the Central Polymetallic Zone. So I'll turn this off and show you what this looks like in 3D. So essentially, within this overall corridor, every single drill hole that we stick within this Perron Gold Corridor is returning anomalous to ore grade mineralization. And the thing that I'm trying to get across to you right now is the continuity of the mineralization present within the system. So we'll do a 1 gram cutoff, and these are the individual deposit lenses that we're looking at. Here's the Eastern Gold Zone, Grey Cat, Gratienne. At 3 grams per ton, again, you can still see this very clear Eastern Gold Zone, Denise Zone, Grey Cat, and Gratienne. Looking from underground down to a kilometer depth, we're still seeing exceptional continuity. And what's really exciting for me is if we keep cranking up this cutoff grade, we're now at 5 grams. You can still see each of those individual deposits, 10 grams, same thing from underground down to a kilometer across this 3 kilometer corridor. Even at 20 grams per ton, you're still seeing exceptional continuity of mineralization. And even above an ounce per ton, especially on our high grade Eastern Gold Zone, you're seeing like beautiful, beautiful, beautiful continuity. Here's 50 grams per ton. But what's really exciting for potential investors here is the possibility of not only mining this underground system, but of Amex defining a large open pit resource of a multi-million ounce project, plus the optionality of a very high grade bonanza grade system that has been tested down to 1.1 kilometers and is still wide open for additional discoveries. So I'm gonna leave it at that. Boom.
Thank you very much. On the spot. Great. Yeah, please, our judges come back now with questions and go online, please. Yeah. Questions, please, to Kelly.
So, Kelly, what do you have so far defined at the project? in terms of resources, timeline? Can you talk a bit about it?
Absolutely. So this was a discovery made in November of 2018. Since then, we've drilled about 110,000 meters. We have yet to publish a resource. However, what we've done is we publish our entire database online, which is something that many exploration companies don't do. On the backs of that, we've had several mining companies reach out, and especially over the past 2 months, we've had a lot of interest from mid-tier and major producers in the asset that we have. So nothing formally published. However, our entire database is available for anyone to model their own resource on the project.
Thank you.
Kelly, you said you've got $35 million in the bank pending this next closing. What's the next steps? Are you going to continue to drill all those zones or targets? Like, can you just walk us through what your next plan is?
Sure. So we're targeting a maiden resource globally across all those different zones that I showed you by about Q3 of 2021. In the interim, we've got about 90,000 meters of drilling planned, with 7 or 6 drills currently, soon to be 7. It's one of the biggest exploration programs in Canada by a junior currently. And that's the plan, is develop this thing into a resource. We've completed our metallurgy. We announced that a few weeks ago. It was spectacular at about 99% recovery. Basically, we're trying to build up a lot of ounces here, and we'll see what happens on the M&A front once we come out with a resource.
Thanks.
We still have time.
Oh, I have a question then. You're in one of my favorite jurisdictions in Quebec, but I'm just looking at your market cap compared to some of the others that we're talking to today, and you don't have a resource out. Just as an investor, have I already missed the boat?
I would say not. There's I think some shareholders on this call right now that asked me that maybe a year ago in different conferences. We've heard that ever since 50 cents, $1, $2, $3, and upwards. The news flow that we're putting out, Angelina, is stellar. Every 3 weeks we have drill results coming out. We're building up something that 3 independent analysts, including someone from your firm, is covering, with high target prices from each of those analysts, well above what we're currently trading at. And all 3 of those independent analysts are seeing a significant accumulation of gold in the ground, which in the event of an M&A deal would be a significant premium to where we're currently trading.
And Kelly, was this a brownfield? Is this a brownfield site? Was there production historically here?
So just to the southeast of us, there's a mine called the Normatel mine. There's a little town named Normatel on the backs of that. That was mined for about 50 years. This is kind of a funny history of this project. It's been held by this company for 20 years, was acquired in 1996, and always kind of sat on the shelf. Wasn't ever really the main focus of the company. We restructured the company in 2017, started capitalizing it in a much more aggressive manner. And on the backs of that capital coming in the company, compiling all of the historical data, that's how we made our discovery of the Eastern Gold Zone. So it's been a long time coming, and it's a pseudo brownfields project, Angelina. Anyone else? Am I off the hook?
They're all convinced, you know.
Well, thanks, everyone.
Lawrence, maybe you have one?
No, I'm good. Oops. I'm good. Thank you.
Okay. Anyone else?
Well, yeah, I mean, why not, Kelly, talk a bit about the timeline, what you intend to do over the next couple of years, assuming no bid comes for the project?
Sure. So essentially, it'll be continue drilling, defining our resource. If you take a look at our news releases over the past really 2 years, you can see that we're rapidly expanding our known zones of mineralization. The idea will be continue defining and expanding upon what we have. After we launch our maiden resource, which we plan to initiate in Q3 of next year, we hope to have that out by Q4 of 2021 or Q1 of 2022. We'll start working on economics. Our team here has built, financed, developed, and sold many mines in all of our directors and management's history. We have no problem raising capital, as you can see, based on our our track record so far. So essentially, we'll advance it to production if that's the way that we're going. We think it's a very valuable asset, and I'd be very happy to be involved in that build out process as well.
Okay. We still have 3 minutes to go, but if you are fine, we can also move on. No problem. Is everybody fine?
Just one more question. Given your current market value, how do you see the potential to continue to add value from this point forward?
Well, I take a look at some of the sort of superstars on the TSX venture right now. So that would be probably Great Bear Resources and Wallbridge Mining, both at $1 billion, both pre-resource. And I think what they've done very well is shown to the market the large potential that they have on their project and their properties associated with very high grade gold. So what we're now starting to show to the market is we've got this corridor of greater than 3 kilometers. We've drilled it now down to 1.1 kilometers depth. And our grades are honestly second to none. If you take a look at our press releases, we have as good a grade as anyone else on the market right now. So I think we're starting to build our audience. We're getting some new US shareholders involved. And we're opening it up to a broader market. And I think that we have a good chance of significantly appreciating from where we currently are.
All right. Then we are fine. Okay, super. Thank you very much, Kelly. Well done. Thank you. So let me reshape that. And so we are coming to our last battler, which is Michael Rowley, who is the president and CEO of Group 10 Metals. So Michael, if you are ready, I can start the clock.
Thank you.
Good. Then let's get ready to rumble.
Is that working okay?
Yeah.
Well, thanks, everyone. Group 10 Metals is a growth stage exploration company. We have 100% ownership of... Hang on, that's not advancing. Is that not advancing for you?
No, not yet.
You
share the screen, and then you should...
Yeah.
You should be able to do that from your screen.
Yeah. Usually that works. Well, let's not worry about that then.
Okay.
I'll just do it. Yeah, we're a growth stage exploration company. We have 100% ownership on 3 district scale assets, all in North America, and all besides some of the best deposits and mines of their type. 2 of these are platinum group nickel, and 1 of them is high grade gold. Our strategy is to monetize our Yukon and Ontario assets to focus on our Stillwater West project in Montana. We adjoin Sibanye Stillwater in the district. We basically share the district with them. The Stillwater district, of course, the largest PGE district outside of South Africa and Russia. And their mines are the highest grade in the world with 16 grams per ton palladium platinum and more than 80 million ounces of PGEs. We're the first to systematically target Platte Reef style mineralization at Stillwater. So the target here is tens of millions of ounces of PGEs, billions of pounds of nickel and copper. And we're doing that based on known parallels with the Bushveld district of South Africa. So Ivanhoe's Platte Reef mine and Mahalaquena, Anglo-American's Cash Cow, are examples. These are massive nickel and copper sulfide deposits and with PGEs and gold. They're attractive because they're polymetallic. They're both battery metals and also PGEs, precious metals. And their size and grade allows them to use bulk mining methods, which makes them some of the most productive, profitable, and longest lasting mines in the world. Our 2019 drill program confirmed Platte Reef style mineralization at Stillwater. We had mineralized intercepts tens to hundreds of meters, and we're now advancing block models towards maiden resources at our 3 most advanced target areas. Our commodity basket, to use Robert Friedland's term, is perhaps 1/3 palladium, 1/3 nickel, and 1/3 other. Those others being palladium, platinum, rhodium, gold. And we're in the US with 3 mines and a smelter is a key point. Near-term catalysts are news flow. We have programs underway, IP survey and drill program. In the bigger picture, we have attention to the majors, but we feel there's a lot of value that we can add first before we look to do a deal. We're permitted and funded into 2021 to meet our objectives. We have $6 million in the bank and $14 million in the money options and warrants. And I'll just leave it there and go to questions if I'm out of time.
Super, thank you very much. That was perfect. And yeah, please, our judges, switch on again your video and your microphones. Now, questions for Michael, please.
Michael, what's your market cap?
53 million. 143 million shares outstanding.
How much cash do you have today?
6 million in the bank and 12 million warrants in the money.
Okay. What? Go ahead.
So, Michael, how similar is the geology of this project to that of a Stillwater company?
We have reef type systems like theirs. They're in a reef mine. It is a layered magmatic system. However, we're generally in the lower portion of that, and our focus, this Platte Reef system, is in the lower portion. So their JM reef is above us. We do have a picket pin reef actually above them in that layered system. It's not our focus. Right. Our focus is that lower system, and that's where we found this great opportunity applying that thinking from South Africa.
And lower system means the metallurgy. This is a different kind of ore body. The metallurgy is different.
Well, it's a bigger system. It's still nickel sulfide. Their deposit is actually a nickel copper sulfide. It's just very low in nickel and very high in PGEs and 2 meters wide. Our target is more like tens to hundreds of meters wide. Big systems, big disseminated net textured massive sulfides. You get these lower in these layered systems because of these bigger magma mixing events that happened.
Right. And a Stillwater company does not have this kind of system at their project?
No, they're in the middle of the layered stack. Yeah.
Right. Okay.
Our parallel is Ivanhoe's Platte Reef Mine and Anglo's Mahalaquena at the Bushveld. Stillwater would be parallel to the Berensky. Yeah, sorry.
Sir, with the 6 million you've got right now, that'll get you sort of early into next year in terms of exploration. Are you gonna, and with the in the money options and warrants, like what can you just talk about what your plan is with that 6 million and how you're gonna continue to develop?
Yeah, I'd be glad to. I think we might spend a further 3 million in the field this year of that. End the year with 2 or 3 million in the bank and look to bring those warrants and options in to fund next year's work. We did a $4 million program total this year budget. We could easily do 8, 12, 16 next year. We're permitted on 50 drill pads and we've got a lot of targets. So really the objective here is to debut those resources, revalue the company, do bigger programs.
When do the warrants expire and what is the exercise price of the warrants?
Warrants are between 20 and 30 cents. The earliest expiration is about 13 months from now, November 2021. Mm-hmm. Some of the accelerator trigger requirements have been met, I think about 2.8 million worth. So we could, at our discretion, hard call some of them. We don't want to do that at this time. We don't feel the need to. But we do have some options in that regard.
Michael, you mentioned tens or hundreds of meters, so you're getting Platte Reef type thicknesses, but are you seeing the kind of grades of Platte Reef in what you're drilling?
Yeah, we got a 25, it's a shame I couldn't make my land position slide work. It's a 54 square kilometer claim block, 25 kilometers in span. And so there's a lot of room for kilometer scale targets in there. We see the widths, dimensions of a Platte Reef, and we see some variability across the system too. A little more base metal rich on the east, a little more precious metal rich on the west. In general, Yeah, our nickel is probably running 0.3, 0.4%, a little higher than Platte Reef typically. Their PGEs are running 2 to 4. Ours are running more like 1 to 2. Now the caveat there is that we have not yet been able to test these conductive highs. There's some very compelling targets next to our drill defined mineralized zones that appear to be bearing higher grades. So a key part of this year's drill program is that we're stepping away from the past work and testing those. But our understanding to date is the numbers that I just related there.
Now, are you seeing a correlation between the sulfides and the PGE?
It varies, and really that's a question that might be worth a follow-up. On the eastern side of the project, the system tends to be more simple. There are some later magmatic events at the Chrome Mountain area in particular that make it more interesting for the geologists. So yes, in general, it's sulfide, it floats well. Amex did really good work in the 70s to show us that the PGEs report in potentially saleable concentrates, and the nickel as well. The great majority of the nickel is sulfide and reports.
I have a question about Montana. We spent some time talking about permitting in California. Clearly, you're in a mining-friendly state. Do you have anything to say about your experience so far there?
It's been fantastic. I certainly had concerns about that going into this project. And the forestry there has been, I've got the permits the fastest I've ever got them. We are, of course, beside 3 operating mines. There's a smelter in the district, but they're very well liked. They have the highest wages in the state. Sibanye is the biggest taxpayer in the state, and they have a very good neighbor agreement in place with local groups that are concerned. And that actually ended the lawsuits that raged starting in about 1986 when the mine opened. As of 92, they've had this agreement in place, and it's been smooth sailing ever since then. The mines are expanding. They just brought the latest one online 3 years ago. It looks really good.
Is that why you are focusing in the US and not in Canada, where your other projects are?
It's simply the potential. I mean, the reason that we're able to talk to majors is the Stillwater address and the database that we're standing on. Some of the majors have been very clear with us that they cannot find a 40-year mine life of nickel grade that they like basically anywhere. And this is on a very short list to provide that. So it's obviously the asset that we need to run with right now. The Yukon is earlier stage, compelling, but earlier stage. And Ontario Gold, that's getting more valuable all the time. We adjoin Treasury Metals there. So their work consolidating that district is making our ground that much more valuable. It's an M&A target.
Thank you.
40 seconds left. More
Are
questions?
you impacted by forest fire season this year?
No, it's been very light there this year. Then you've obviously worked in Montana before. That is often a concern. We do have some priority access. We are allowed to function through some levels of forest fires. Obviously, at some point, it's bad enough and they give the word to get out. We haven't had that yet in 2 years of drilling there and 3 years of doing programs.
All right, super. Thank you very much. That was exactly 8 minutes. Super. Please switch on all your screens again, and I would love to go in the order now to ask each judge for which company he is voting or she is voting, of course. And I think you can split up with 2 companies if you like, otherwise it's getting a bit complicated. $1 million is the amount to invest, and I would love to start with Lawrence Lepard. If you give us your votes, please, and if you like, in 1 or 2 sentences, give us the reason why you would love to invest in this or in those 2 companies.
Yeah, certainly. So I would split my votes between 2 companies. I would do half of it into K2. I think it's probably a pretty good piece of dirt. I think I like the valuation. Valuation counts a lot. It's obviously cheap if it turns out to be as prospective as it looks. And I think the California stuff will be overcome. I think with COVID and everything else, there's going to be a lot of, I think a lot of the permitting issues that have plagued companies in the past are going to melt away a little bit because they're going to want the jobs and the economic activity. So I don't worry too much about that. And it's a very low valuation for what it could potentially be. So I think there's a lot of upside in K2. I'm a shareholder already in Amex, and I really like Amex a lot. I think it's a fabulous deposit. It's not as cheap, but I love the company. I think it's going to do very well. And there's a much higher valuation there coming. The other two projects look very good as well. I'm not as familiar with the Cobalt market. It's not what I do. One thing I didn't like about it, I didn't like that the good PEA is based on a 100% increase in the existing price, which may occur, but I can't bet on that. And I'm not a knowledgeable person about PGE, so I think Amex probably got one hell of a great property. But I'm sorry, not Amex, Group 10.
Okay.
Probably has one hell of a great property, but I just don't feel qualified to be making investments there. So.
Okay, super. So that's one vote for K2 and one for Amex, just to be clear. Okay, super. Then Miranda, please let us know what you want to do with the money, aside of spending it elsewhere.
Thank you all for very good presentations, and it's tough to do it in 3 minutes to encapsulate all your work and effort and energy and time. First off, I'm going to split my money, and interestingly enough, I'm doing the same as Lawrence. So K2, I had a chance to take a look at the company a little closer earlier this week, and I was impressed. And having done some work in California in my previous life as a banker, I think there's a lot of opportunity there. They seem to be on a good path in terms of working with the state and local authorities. Permitting, we went through that with another company many years ago, and that they seem to have a handle on that. And so I really liked Stephen's articulation of the next steps, and I think there's a lot of upside there. The other half would go into Amex. It's one of my favorite jurisdictions. I think they've got a very impressive deposit, even though they do have cash in the bank. Currently, I think there's a lot more value that can be built there, and they're certainly on a good path to do that.
Mm-hmm. Super, thank you very much. Next one is Jayant, please.
Hi. So I would put my money in Amex Exploration. The company has done extremely well over the last few years. In my view, what they have in the ground pretty much supports their current market capitalization. I like the fact that they have put all their data online, which allows people to look at how reliable, how good the data is. I like the fact that they have a lot of cash with them to continue working on the project. And I can see that they should be able to come up with a resource, which means that I should be able to make my money, my upside very quickly in this company. So that is the reason why I'm interested in Amex Exploration.
Mm-hmm. Okay, super. Thank you. So then we have Lawrence Roulston.
Well, in real life, I would be all for diversification, and these are all great companies, and probably would put some money in each of them. But if I had to pick one, and just to make the contest interesting here, I'll go with one. And I'm going to go with Group 10. The Stillwater Complex is an incredible geological feature, and having a big piece of that, and I like the idea of going for the plot reef model on it. You guys seem to be onto something really significant there, and you've got a great team behind you. So to pick one, I'll go with Group 10.
Mm-hmm. Super, thank you very much. Then Angelina. No, please unmute yourself.
Oh, sorry. Yeah. Okay, there we go. I'm going to split as well. Very difficult to compare such diverse companies to different commodities across different jurisdictions as well as regions. And I also have to think about what kind of investor I am, right, to put my million in. And because I'm a banker now, I'm going to pretend that I'm still in private equity. So the things that are important, obviously, are commodity, jurisdiction. I really like to see some kind of innovation, and I'm really keen on ESG as well. So having said that, I'm splitting. I'm going to go Group 10, and I'm going to go Amex. A lot of that has to do with jurisdiction. If I only have $1 million, I don't know where else to, I don't know why I would risk what's happening in California. And Trent, while I'm totally sold on EV, I'm thinking that the nickel supply is going to be challenged before anything else. So thank you all for your great presentations.
Super, perfect. Thank you very much to everybody here, and well done, judges. Also, that was great questions, I think, and also thank you very much to our battlers here with great presentations. And you all have great companies, but of course, everybody has to decide by himself, and that's the nature of the game, I would call it. We have a winner, and this is Amex with 3 votes. Then we have Group 10 with 1.5 and K2 with 1.5. So Amex has won the battle. Thank you very much and congratulations. And also, I think we lost Steve Swatton as he has some internet problems here. Yeah, so from that side, I want to thank you all. That was, as always, a big pleasure and big fun. I hope that we can do that again next year live on stage, because this brings much more fun and we can have a beer afterwards all together. And yeah, I want to thank also Dundee Goodman, who was the sponsor of this session here. And the closing is fine and done. I would say, please all stay healthy. That's the most important thing. Wish you already a great weekend, despite we have to work tomorrow. But for me, it's now already Friday. And yeah, wish you all the best and hope to see you soon, healthy, in good shape, and to have some fun. Thank you very much, and bye-bye and good night.